at $600 billion of total market cap for Bitcoin, if you include all the Bitcoin that have been produced to date, a sovereign who wants to go park $50 billion because they happen to have a $5 trillion set of assets in their overall portfolio, that would have huge impact on the price of Bitcoin.
This content is brought to you by Link2, which makes private equity investment easy. Link2 is a great platform that allows you to get equity in companies before they go public, before they do an IPO. Within their portfolio includes crypto companies, AI companies, and fintech companies. Some of the crypto companies you may recognize include Circle, Ripple, Chainalysis, Ledger, Dapper Labs, and many more. If you'd like to learn more about Link2, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Fred Thiel, who is the CEO of Marathon Digital Holdings. Fred, it's great to have you back on the show.
Great to be here.
Fred, we last spoke about 2 years ago. I'm excited to hear the latest updates around Marathon Digital. I'm excited about the boom in Bitcoin mining in the United States, and Marathon is certainly one of the leading miners. Tell us what's new with Marathon.
Well, compared to 2 years ago, we've grown a lot. We're now with, over 23 exahash of installed capacity, about 19 exahash operating, just waiting to turn on our Garden City site, which should be any day here. And, we've also expanded internationally. So we now have a 250 megawatt installation in Abu Dhabi, 50 megawatts of which is up and operational. That's all immersion. It's the first site that we've designed, spec'd, built, and operate ourselves fully. So that's very unique conditions. It's middle of the desert and next to the Arabian Gulf, so it's or the Persian Gulf. So it's very hot, very humid conditions. But we do this. We have this great relationship with the local grid operators that allows them to balance the grid using our Bitcoin mining, which they love at the moment, which is great. And that site should be fully operational by the end of this year. And then we've recently announced some additional machine orders. So we'll be growing our capacity to around 30 exahash in the near to mid future. So we're very happy with that. Another thing, we announced a week ago that we were going to essentially redeem about $417 million worth of our debt for equity, which will put our balance sheet in a really strong place. We'll end up with a little over $300 million of debt with over $400 million of liquidity between cash and Bitcoin. And coming into the halving, we think it's really important to have a strong balance sheet with no short-term debt and position to take advantage of whatever opportunities arise.
Yeah, that's exciting. And I'm curious about the Abu Dhabi location. Was it more of a, let's say, friendliness to Bitcoin mining in addition to, let's say, low energy costs? But also, it seems in the Middle East, there's more opening up to crypto in general. What was kind of the strategy behind, positioning yourselves there?
So, the core desire was a couple of things. One, balance the grid, because in the summertime, they use 4 gigawatts of power. In the winter, it's only 1 gigawatt. So it's a huge asymmetry in the power need. And they had just put online a new 5 gigawatt nuclear power plant. And so they have this excess power. So what do you do when you have excess power? Well, you find a customer for it. And Bitcoin mining obviously being an easy customer to use because we have the ability to be an interruptible load, which for their needs is perfect because in the summer, they don't need 4 gigawatts all day long. They only need it in certain times of the afternoon and evening. And so where initially they were going to consider longer curtailment periods, they're actually doing it in very short increments now. It's working so well that they're looking to automate that whole process, which will be great because we're ready for that automation. And it was super exciting for us. It was the opportunity to work with a sovereign. Obviously, our core partner there is the Sovereign Wealth Fund. And, they invested a lot of their own capital into this project, which is a core sign of faith and confidence in what we were doing. And it's worked out really well. It's been a great relationship. We only signed the agreement in February and we were up and operational with the first 50 megawatts already by the end of July. So just goes to show how, effective a good partnership can be when it works well.
Absolutely. Now, you mentioned the partner there is this sovereign wealth fund. Now, there's been a lot of talks about sovereign wealth funds, investing in Bitcoin and other aspects of the crypto market. I'm curious, are they, as much as you can tell us, are they also holding Bitcoin physically? I know some folks are waiting for an ETF, but in addition to investing in like Bitcoin mining, like with your company, are they also holding Bitcoin?
Well, yeah, I don't know how they're managing their treasury. I know we divide the Bitcoin based on ownership, and then what they do with it is kind of their own business. But if you think generally speaking, sovereigns, especially ones who are commodity producers, they have historically put their faith in U.S. dollar-based reserves, right? Whether that's treasury bills, bonds, et cetera. And more recently, because of the weaponization of the dollar and this whole kind of petrodollar um, issue that sort of really started being a problem after the 2014 Crimea crisis, and now more broadly with the Russia crisis, a lot of these commodity producers are afraid that their reserves are somehow going to be blocked by the U.S. government and its allies in the event of some global conflict or trade conflict, whatever it might be. And, just looking at what the U.S. has done to Russia, countries like China, UAE, Saudi Arabia, et cetera, the BRICS, Brazil as well, obviously, India, are concerned about holding reserves in U.S. dollar denominated assets because that's potentially risky. So what have they been doing? The central banks of these countries have been buying a lot of gold. They're some of the biggest gold buyers in the world today. And they're looking at Bitcoin. But the interesting thing is when they do look at Bitcoin and they do decide to invest in Bitcoin is, if you're holding Bitcoin, but the only way you can trade it is by selling it on exchanges, which could potentially be boycotted by the government of the US and its allies, they then think, okay, well, if I'm mining my own Bitcoin, not only am I producing Bitcoin, but more importantly, I know that my transactions can get processed.
Hmm.
But they also need to have their own pool to guarantee that. And so, as you may have read recently, Marathon has, developed its own technology stack. We now have everything from the pool through firmware down to, immersion tanks and obviously the ASICs themselves through our investment in Auradine. And so this became very interesting for them because they could now mine Bitcoin, they could operate their own pool, and they could be really self-sovereign over their own assets. So I think we're going to see a lot of other sovereigns looking to do the same thing, which is mine their own Bitcoin, operate their own pool, and essentially, control their own, keys, so to say. So we're super excited about the opportunities to partner with other sovereigns, not just in the region, but outside of the region, who have similar desires. So
that is fascinating. I did not realize that was something that was going on. Wow. And it made me think about, with, as you mentioned, the global macro factors and some folks moving away from using the dollar as a reserve currency and settlement of certain assets and commodities. And this seems like a trend, like you were saying, that could continue. Bitcoin being that asset that no one controls, and they can mine their own Bitcoin and have their own pool. That is very fascinating. And do you see potentially other countries and maybe central banks starting to do things like that?
yeah, I don't know about central banks quite yet. I think over time, definitely, any asset allocator is going to look at Bitcoin as one of those things where when you look on a risk adjusted basis, whether it's 10 years, 9 years, 8 years, 7 years, et cetera, Bitcoin outperforms a lot of other alternatives. So if you want to have a portfolio model with diversification, an allocation of 1 or 2% to Bitcoin makes sense. I mean, what is the allocation most central banks have to gold, for example? And think about gold isn't transportable, it isn't fungible, doesn't have any of the benefits that a digital currency like Bitcoin does. Plus, the fact that Bitcoin is fully decentralized, no government controls it, you don't have to worry about issues. For these BRICS countries who are trying to get off of the dollar as a reserve currency and a trade currency, the problem is, does India want to hold Chinese yuan or renminbi? I don't know. Does the UAE want to hold Indian rupees? I don't know. Same thing with Russian rubles. So, Bitcoin provides kind of this neutral territory. It's just that because there is a very limited supply, meaning it's capped at 21 million Bitcoin, and there's very little liquidity available in the marketplace, the scale of the assets that sovereigns control kind of way overshadows Bitcoin. At $500-600 billion of total market cap for Bitcoin, if you include all the Bitcoin that have been produced to date, a sovereign who wants to go park $50 billion because they happen to have a $5 trillion set of assets in their overall portfolio, that would have huge impact on the price of Bitcoin. And so I think, what you're seeing today is institutional investors, whether it's Fidelity, whether it's BlackRock, or, Franklin Templeton today just announced that they were going to file for an ETF for Bitcoin. When these traditional institutional investors decide that they need to be able to provide their investors with exposure to Bitcoin through ETFs, and realize that, if you're buying an ETF or you're buying spot Bitcoin, there's no difference to your exposure to Bitcoin. It's spot Bitcoin at the end of the day. The difference, though, is that when you buy in an ETF, you're not worrying about custody. You're not worrying about, what the security is, et cetera. There is a unique little difference, though. When you buy spot Bitcoin, you decide the price at which you're buying. When you buy an ETF, it's the price that Bitcoin closed that day, which, as Bitcoin trades 24/7, each ETF is going to have their kind of notional, what's the price of Bitcoin at this time on this exchange somewhere? That'll be their kind of model. But you may not get the benefit of any intraday volatility, right? So if you're, think about it this way. If you're a retail investor and you want to put $100 a month into Bitcoin, it doesn't really matter. But if you're going to buy $1 million worth of Bitcoin, Bitcoin can move 3-4% in a day. So if you can buy on a dip, and timing is obviously impossible to be perfect at, but sophisticated traders could potentially, set price targets. And so, I think what the ETFs do is they broaden the market appetite for Bitcoin. They open it up to more people. You can now put Bitcoin into your 401k, your IRA. So retirement accounts are open to it. There are trillions of dollars in retirement accounts today. A 1% allocation to Bitcoin from retirement accounts would have a huge impact. So, obviously optimistic about the impact of ETFs. I think the impact of the FASB accounting change, which is something most retail investors have no concept for, has a much bigger impact because this affects institutional investors and corporations. FASB is the essentially the body that controls how accountants account for things.
Right.
They set the rules or the standards. And they have now just approved unanimously that Bitcoin will no longer be treated as an intangible asset, meaning you can only impair it, but it will be marked to market just like equities or gold. So the advantage is, as an institutional investor and as a fund, you can now hold Bitcoin and it's transparent what its value is. So every quarter when you report your numbers, you'll either adjust the dollar value of your holdings to whatever the price of Bitcoin is at the time, as opposed to an impairment. And for corporations, this is huge because if you think about Marathon, we had to do a huge impairment over the course of 2022 as the price of Bitcoin kept dropping.
Right.
And we can never mark that up. But now with these new rule changes, when they take effect, which I believe will be for next year, though there may be some early adopters that get a chance to do it before then, we'll essentially, every time we report our financial statements, we'll either mark up our Bitcoin or mark it down in fiat dollar terms, depending on wherever it happens to be at the end of the period we're reporting. So I think that is going to open up the floodgates to corporations and institutions buying spot Bitcoin, which I think is going to be great.
Yeah, for sure. I know you mentioned BlackRock, and last year was tough for the market. You had our bear market cycle, macroeconomic. Obviously, one could argue we're in a recession, and things are not great right now. But all of a sudden, BlackRock said we're going to file for a Bitcoin spot ETF, and then that line grew day after day and week after week. Do you believe we've hit a tipping point of institutional adoption of Bitcoin where, in the past it was taboo? In the past, they were saying negative things about it. I mean, even Larry Fink himself back in 2017. And now they're all trying to grab this asset in different ways and creating different products. What are your thoughts on that? And do you see that trend continuing?
So it's a little bit like the first horse out of the gate is going to get the biggest benefit. Obviously, if an unknown manager were to launch an ETF before BlackRock, I don't think they would necessarily beat BlackRock. But between BlackRock, Fidelity, Franklin Templeton, Van Eck, ARK, all of these guys, all very well known, you're going to see billions of dollars go into these funds overnight because you may very well see people sell spot Bitcoin that they hold and instead invest in these ETFs because it's just easier. You can do it in your brokerage account now, right? You don't have to have a separate Coinbase account. I think the biggest impact is going to be to people like Coinbase and Gemini, the retail traders. If you think about the number of people who hold less than one Bitcoin in their wallets and on exchanges, those are people who will likely prefer an ETF because the cost to trade is tiny. It's, something like 20 basis points, right? Whereas, trading on an exchange, you're going to pay fees going in and coming out. So I think that'll have an implication for the retail side of those companies. And that's why I think you're seeing Coinbase now come up with new businesses and do new and exciting things. But go back 2 years and, towards the middle end of 21, we were all super optimistic about institutional adoption. Then 22 hit. So I'm cautiously optimistic. I think that between the decisions that the judicial branch has kind of handed down recently, clearly the overbearing, overreaching regulatory regimes that have been kind of impacting this space are being checked. And I think that's an improvement. But, you mentioned it, the macroeconomic environment is, I think, what drives Bitcoin price. And this is something I spoke on a panel yesterday at the H.C. Wainwright conference, and I was the sole contrarian in the room when, a lot of people say, no, Bitcoin is going to follow the same historical pattern it has in every cycle. And, that's true. But it's not a cycle that necessarily correlates to or has causation in the halving. If you look at global liquidity cycles have followed Bitcoin's trajectory very closely. And I think it's going to happen again the same way. But global liquidity right now, we're entering a global liquidity crisis, right? M2 money supply is declining. The Fed is tightening. They're doing QT. They're sucking money out of the system. Interest rates high interest rates are sucking money away from things like Bitcoin. So until that changes, and, will that be next year? Who knows? Hopefully, let's see. But until that changes, I think Bitcoin is not going to have this major bull run that everybody thinks is timed to the halving. So I just think it's important for people to really understand that, Bitcoin is the causation of Bitcoin's price movements are supply and demand. And with the halving, there'll be less supply. But at the end of the day, 900 Bitcoin a day or 450 Bitcoin a day, is that really changing the demand dynamics? No. So I don't think the halving has a supply impact so much. But I do think global liquidity does. I do think that, until the U.S. dollar starts dropping, until the interest rates start dropping in this country, and until the Fed stops QT, assets such as Bitcoin are going to have few people chasing them. And so at the end of the day, you can have all the ETFs in the world, but if people don't want to put money into them to buy Bitcoin because they want Bitcoin, you won't see a big price rise. So long-winded answer, but I think it's important for people to understand that.
Yeah, absolutely appreciate that context and the details. To your point, if someone is worried about inflation and paying their bills and so forth, they're not going to be thinking about investing. Well, I'm going to put some money into a Bitcoin ETF. When they have this fear, right, and the Fed is going to keep raising rates, and the price of bread or energy or gas, whatever is going up, it's the last thing they're thinking of. But maybe like you said, hopefully early 2024 or so, the Fed pauses. At some point, they're going to start QE again. And like you said, the liquidity is going to come back.
Absolutely.
Yeah. So we'll be back in that bull cycle, if you want to call it that.
Well,
So,
it's, risk on, risk off. It's kind of, how you have to look at it. And to your point, regional banks, commercial real estate, there's a liquidity crisis getting ready to happen there. The FDIC and the bank regulators are going to have to do something there. Likely they'll have to stop QT because they've been sucking all of the money through the repo market into the bond market, and so they're going to have to shut that down. So that will cause liquidity to come back in. So fingers crossed. We see some positive momentum next year.
for sure. Now, with the halving coming up, and with the context of these Bitcoin Spot ETF applications in play, obviously BlackRock being the biggest, some are anticipating a potential approval in Q4. Obviously, we don't know if that's going to happen, but how are you as a miner preparing for these catalysts, right? The halving and with the ETF approvals, because I'm assuming that you're going to see increased demands. Are you this is a twofold question. How are you planning for that? And are you, getting calls for possibly buying Bitcoin that you guys are selling from some of these big players?
Um, so not going to comment on whether we're getting calls or not because we get calls all the time. So,
Sure.
but I'm not going to comment on any change in that.
Sure.
We don't sell direct to customers. We sell typically via OTC desks.
Mm.
So we're not necessarily aware of who our counterparties are when we do sell Bitcoin. At the end of the day, these large buyers typically are trying to buy at a discount, actually, not at a premium.
Right.
So if they can find coins, other places, they will. I don't think any of these ETFs, for example, have an ESG requirement that the coins are fully OFAC compliant or other things like that. Those are things that I think we may still see the SEC plug in as requirements, and that will change the nature of how they have to source coins, most probably. But we'll have to see that. So I think there's a lot undecided yet. I think the nearest deadline is about 45 days or so out. I think it's an ARC application that they need to respond to. But I think generally the consensus amongst most people I speak to say that if the SEC is going to approve, they're going to approve a number of them all at the same time. They have to, if they're going to approve any, they have to approve the grayscale conversion. Now, what they may say is, they may do another round of questions and comments and cycle through this. I think the kind of end point of all this is sometime at the end of Q1 next year, most probably. I don't think we're going to see something this year necessarily. I think Congress, for one thing, is going to be very busy with budget and the stalemate around that and the spending. And then you've got a bunch of other hoopla going on in Congress right now. We're going into an election. We're in a presidential election cycle. So there's a lot of stuff like that going on. So I don't think we're going to see any real progress on crypto legislation until next year, possibly.
Sure.
If then, but we'll see. McHenry is up for re-election. Is rather termed out as chair of his committee, and so I know he wants to get his legislation kind of through Congress before he terms out on that. So I think we'll have to see, but we'll have to see what happens on the Coinbase lawsuit. That's got huge implications because if the SEC decides that, hey, let's get a win here, we'll approve some ETFs and we'll settle with Coinbase, no harm, no foul, slap on the wrist, you don't admit you did anything wrong, and we all move merrily on, and maybe you remove some tokens that have been listed, then I think at that point, Chair Gensler can say, put his hand on his chest and say, well, see, look at all the good stuff I did,
Yeah.
um, and maybe walk away with a win. Otherwise, if he refuses these ETFs, he almost, there's a high degree of certainty he's going to have to roll back these spot, rather the future ETFs,
Mm-hmm.
which would be a huge black mark. So listen, all of these people are political animals. I have a feeling he has aspirations for higher office, and he needs some wins in the column, because right now the judiciary certainly hasn't been giving him the wins he wants.
Oh yeah, absolutely. Now tell us about Marathon's mining that is taking place this year. Maybe how many Bitcoin you've mined, and also there was reports of with the Texas heat wave of ramping down a bit there. Are you ramping back up now in September? If you can give us some insight on that.
Sure. I mean, you can look at our production numbers. They kind of speak for themselves. We were down 9% in August over July, um, which is not a whole lot considering the fact that, there was a lot of curtailment that happened. Um, so what you'll see is August and July, you had over 1,000 Bitcoin each month. We did about 2,300 Bitcoin in Q2. So you should be able to infer that we'll likely do something close to 3,000 Bitcoin
Mm.
or more if Garden City turns on here in Q3, which will be a nice uptick. And, if you think about it, over the past 12 months, through the end of Q2, year over year, we increased our hash rate from zero point 0.8 exahash, because July of last year, we were almost mining nothing, if you think about it, to having over 19 exahash um, operationally. So significant uptick in the amount of hash rate. Our percentage of the global hash rate, went from 0.8% to somewhere around 3.2%, and it'll continue to grow this quarter, which is in light of kind of a doubling of the difficulty rate, an eightfold increase in our market share, which is great. Uh, Quadrupling of our market share, but with a double difficulty added to it. So we're very happy with the progress we've made. It took longer than we wanted to, obviously, but ourselves in the market can be impatient at times. But we have now a prudent kind of tempo, if you would, of how we look at what we're doing. We're primarily focused on owned and operated sites now, moving away from kind of the asset light model. We're looking for balance in our portfolio. So we want to have a balance of third party hosted and a balance of owned and operated. We think that over time, you'll see us favor owned and operated. And, as I've said on a number of calls more recently, you'll see us go about 50% of our capacity domestic, 50% internationally. We're looking in Latin America, we're looking in Africa, we're looking in Asia, looking in Europe. And we're continuing to look in the Middle East, and we'll expand in all those regions, as appropriate, to get good diversity. There's some great energy prices that we can get out there. And then at the same time, we're also doing a lot of really interesting stuff around leveraging the heat that we generate, especially in our immersion systems, for things like experimenting with greenhouses and experimenting with shrimp farming, which will generate profitable streams to the business. So the goal here, kind of longer term, if you would, is to really look at, how can we make the cost of energy disappear?
Mm.
Because if it doesn't cost you anything to mine, then you're going to be the last miner standing, no matter what the global hash rate is and no matter what the price of Bitcoin is.
Sure. Yeah. Can you tell us more about the shrimp farming? So would it be like integrating these additional business operations into the existing mining setup, or moving the mining
It's
setup
think of it as partnering with these types of operations
Mm.
and then having revenue shares in their product. We don't want to operate shrimp farms or
Sure.
greenhouses. That's not our core competency.
Right.
And I don't want our shareholders thinking we're going to invest capex in those things. But we can sell our heat to
Mm.
them, essentially. Right? It's just like with our technology stack, our vertical technology stack. We are out there talking to third-party miners about them using our firmware on their Bitmain machines. We're
Mm.
out there talking to sovereigns about them using our pool for them to operate their own pools. We're
Mm.
out there talking to people across the computing industry about using some of our immersion technology. And, that creates diversification. And if you think about Marathon's objectives more recently, it's been about energizing capacity. It's been about optimizing the capacity we do have, make it more productive, lower our cost of mining. And then now we're also looking at things like diversification,
Mm.
where we can leverage what we do in mining to make money in other ways.
Yeah, that absolutely makes sense. So I'm curious, with the halving coming up, is there a race to get as many Bitcoin as possible, from in a profitable way, of course, ahead of the rewards being cut? Is that a strategy or a plan that you guys have that as it gets maybe in January 2024, let's ramp up our mining?
Yeah, so it's the goal is always put online as much capacity as you can before anybody else. So because we operate in a zero-sum game, right? It's 900 Bitcoin a day until April of next year, and then it's 450 Bitcoin a day.
Hmm.
So you're always focused on optimizing and maximizing your production capacity. I think for people who are now spending a lot of money on Bitcoin miners that they'll plug in Q1 of next year, if the price of Bitcoin isn't where it's profitable for them to mine post halving, I think they're going to be in a lot of trouble. And I think if you look across the fleet of miners out there globally, the average energy efficiency is somewhere around 33 joules a terahash based on the nonce analysis that has been recently done. Our fleet operates at an average efficiency of about 25 joules a terahash. So we're way down there, meaning we're much more efficient. There is risk at the halving if the price of Bitcoin doesn't appreciate significantly, that anybody who is operating anything above 30 joules a terahash will have to stop mining.
Hmm.
And so if you start looking, what machines does that mean? It means anything but S19J Pros, most probably. Anything older than that, you won't be able to mine with unless you have free energy.
Sure.
Or very, very low cost energy. So I think it's, you're going to see at the halving, again, depending on where the price of Bitcoin is, caveat, what most analysts out there are predicting is assuming a 25 to 30% decrease in global hash rate.
Mm.
So that means people shutting off machines, not turning on machines.
So that's certainly an opportunity, right, for those who can still continue mining and
Absolutely.
because I mean, I know it gets more difficult as each halving. So I'm curious what's Marathon's long-term strategy. And you mentioned, branching out into other business layers, not deviating too much on Bitcoin mining, but like you said, utilizing as much of the process to monetize it and recoup, costs and things like that. What's your long-term strategy for the next halving and so forth?
So again, we kind of look at ourselves a little bit the way oil companies look at themselves, right? You're pumping oil out of the ground, so you have to constantly be exploring new places to find oil. So we're exploring new places to host miners. We're constantly exploring new technologies to make our mining more efficient, lower our cost to mine, increase our energy efficiency. We're constantly looking at ways to reduce our energy cost. And then, like oil companies, you can either sell oil or you can refine it into products like plastic pellets and fertilizer and things like that. So we're looking at kind of the downstream opportunities to earn margin on the exhaust of our business, if you would. No pun intended, because the heat is kind of an exhaust. But also Bitcoin and building things at layer 2 and layer 3. So we think that it's very important that we continue as an industry to remove the friction of using Bitcoin and the Bitcoin blockchain, two different topics here, as much as possible. Because if we can make it easy for people to hold Bitcoin, the currency, meaning the store of value, and use it for whether it's transacting, settlement, or just holding value, the more friction we can reduce, and ETFs goes a long way to reducing that friction, is great. And then what can we do to reduce the friction so people can build applications on top of the Bitcoin blockchain? Because at the end of the day, we need adoption to happen.
Yeah.
Because when adoption happens, transactions happen. When transactions happen, transaction fees will go up. We've already seen this with ordinals, what happened there. And when transaction fees goes up, the security budget for Bitcoin is insured. And the security budget is essentially how Bitcoin miners are paid. And while this halving, which is near upon us, doesn't pose huge issues for that, 2 halvings from now, so not 2028, but go down, one further,
sure.
2032. And if you look at the price that Bitcoin has to be at in 2032 for the subsidy to keep miners operating, if there isn't a substantial increase in the transaction fees, or if miners can't generate revenues via other means, then I think you're going to see a considerable restructuring of the mining industry. And, it will get consolidated, and it will likely become very closely tied to the energy industry.
And you mentioned scalability and improving real world use and adoption. What do you think about the Bitcoin Lightning Network, and are you doing anything on that front?
So I think the Lightning Network is a great initial foray in a way of being able to create a transaction layer that settles on the Bitcoin layer, on the L1. I think there's still way too much friction to using Lightning. And I think there is a huge amount of innovation that's going on, but even more that should be going on to reduce that friction to zero. It really should be as easy as, I've got my phone here. I have fiat in my bank account. I have Bitcoin in my bank account, and I go and I tap to pay, and I choose, am I going to pay using Bitcoin, or am I going to pay using, fiat currency, or am I going to pay using some stable coin? And then I can manage my assets on my app, shifting Bitcoin to stable coin or Bitcoin to fiat. And then when I pay that transaction layer, I really don't care how it operates. It just has to be frictionless. Right. It's kind of, think about it. The user today thinks the Visa MasterCard network is frictionless. If you talk to the merchants, it's not frictionless, which is why Visa and MasterCard are looking at things like Solana now and other technologies to settle. Because, merchants pay high fees and they get their money 3 to 4 days later.
Yeah.
So, they look at the alternatives if they were to adopt Lightning. And again, you could make the fiat to fiat payment go over Lightning and make it totally frictionless. But, people have to get money transmitter licenses. There's a whole lot of regulatory rigmarole you have to go through to get that done. But technologically, you could make it magic. And, Steve Jobs was famous for saying that, the closer technology is to magic, the more easily it'll be adopted. So, and I'm paraphrasing. So yeah. I know I'll get a bunch of people on Twitter or X that'll hammer me for that now.
Final question here for you. What are you most excited for in this upcoming next bull market, I should say, with Bitcoin, and let me rephrase that, with the macro being in a better position, the crypto market and Bitcoin following that liquidity cycle, what are you most excited about?
So I'm super excited about the innovation that's going to happen. I lived through the internet 1.0, 2.0, and now we'll see about Web 3.0. Though I think it's not about virtual reality and games. It's about a much bigger thing than that. It's about people owning their data, monetizing their data, and having data at the edge and not siloed in centralized application. But I remember the days of, I took the first company I was CEO public. The first public company I did an IPO on was in 2000. And, it was in the middle of the internet 1.0 wave. And, people were building the equivalent of the delivery services and grocery shopping and pet stuff. And it all crashed because it was too early.
Well,
There
yeah.
wasn't consumer adoption. Then came 2.0 and there was consumer adoption, right? And we had built these great companies like Salesforce.com, all of these, Facebook, Google, et cetera. Right? So, we have gone through, you know, blockchain and crypto 1.0. That happened.
Yeah.
Now we're moving forward into 2.0. And what's in 2.0? Well, I think 2.0 is where you really start seeing real use cases that cause people to want to adopt it.
Right.
And whether that is leveraging blockchain to validate data for AI systems so that they won't be biased, or whether that is as oracles of truth for automated transaction systems where, your car's driving down the highway and paying tolls automatically and things like that, without you even thinking about it. There are all sorts of reasons to leverage blockchain technology and things we do every day. Not all of those applications need to be decentralized, though.
Mm.
And so it's, how do you pick the right applications to deploy them on the Bitcoin blockchain? Today with um, Taproot and the other BIPs that have been adopted, and hopefully, BIP 300 and BIP 301 will be accepted as well because Bitcoin needs to continue to evolve. Um, we'll see great innovation, and that's what I'm most excited about because innovation drives adoption, adoption drives growth, and growth is a tide that floats all boats. So,
Yeah, absolutely. Definitely agree with you there. Fred, pleasure chatting with you. I'm excited to see the future updates around Marathon, and we'll try to meet again rather than 2 years later, maybe sometime next year. But thank you for joining me.
absolutely, anytime. Good catching up with you.